Nobody knows what the market is going to do tomorrow, next week, next month. Nobody knows what business is going to do. Very occasionally, but it'll happen again. We will be bombarded with offerings that we'll be glad we have the cash for.
Warren Buffett, who is widely considered the most successful investor of all time, just had his Berkshire Hathaway annual meeting where he takes questions from the audience and media. They also just revealed their latest quarterly results where their cash and short-term cash equivalents hit a record high of $347.7 billion. You heard me right, nearly $350 billion. This was also the 10th consecutive quarter where Berkshire Hathaway was a net seller of stocks, meaning they were selling more than they were buying during the quarter. But let's not forget they still have a massive public stock portfolio with some of the highest quality companies in the world like Apple, American Express, Coca-Cola, Bank of America, Chevron, Moody's, Occidental Petroleum, etc. They also have a ton of fully owned private companies like their insurance business, which includes giant companies like Geico. They also own the BNSF Railroad, which is a huge company that he bought in the Great Financial Crisis. And Berkshire Hathaway Energy is one of the largest utility companies in the entire United States. And I'm bringing that up to add some context here that Berkshire Hathaway is not in any way out of the market. They are still heavily invested in the US economy. But Berkshire Hathaway continues to have cash coming in, and this cash pile now sits at a record high amount. So of course, that was a big question being asked to Warren at the annual meeting. So today I'm going to provide Warren Buffett's answer explaining exactly why they have such a large cash position and whether or not they plan to buy. It should be noted this is as of Q1 2025, which ended March 31st. So before we had this 2025 sell-off. So all that April volatility could have created a potential opportunity for them to buy. But from what I've watched in the meeting so far, Warren has not mentioned that they've had any large purchase. So after Warren explains his thoughts on the large cash position, I am then going to bring up a question where he was asked about investing in the United States and whether or not in 2025, with all of the tariff trade wars and everything, if he thinks the US is still a good investment. And as always, he gives the long-term thought-out perspective. And if we stick around to the end of the video, I'll give my brief thoughts and analysis on Berkshire Hathaway stock and explain why it's been such a successful investment and why it will likely continue to be in the decades following Warren Buffett's leadership. With that said, let's roll the intro and jump into the analysis. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. So here's the clip from Warren Buffett talking.
Berkshire holds over $300 billion in cash and short-term investments, representing about 27% of total assets, a historically high figure compared to the 13% average over the last 25 years. This has also led Berkshire to effectively own nearly 5% of the entire U.S. Treasury market. Beyond the need for liquidity to meet insurance obligations, is the decision to raise cash primarily a de-risking strategy in response to high market valuations, or is it also a deliberate effort to position Berkshire's balance sheet for a smoother leadership transition, providing Greg Abel with maximum flexibility and a clean slate for future capital allocation decisions? And I will add one line from another shareholder, Mike Conway, who asks, are you encouraged you may see some fat pitches coming your way?
Yeah. Well, I wouldn't do anything nearly so noble as to withhold investing myself just so that Greg could look good later on. Now, if he gets any edge when I leave, I'll resent it. So the amount of cash we have is we would spend. We came pretty close to spending $10 billion not that long ago, for example. But we'd spend $100 billion. I mean, and those decisions are not tough to make. When when something is offered that makes sense to us and that we understand and offers good value and where we don't worry about losing. And the one problem with the investment business is that things don't come along in an orderly fashion, and they never will. I mean, it isn't like every day. The long-term record is sensational, but that is not a product. And I've had 200 trading days times 80 years. 16,000 trading days. It would be nice if every day you got 4 opportunities or something like that, and and they were expected to be equally attractive. Charlie always thought I did too many things. He thought if we did about 5 things in our lifetime, we'd end up doing better than if we did 50, and that we never concentrated enough. So that we would rather have, if we've got $335 billion now in treasuries, we would rather have conditions that are developed where we would have like $50 billion or something like that. But that just isn't the way the business works. And we have made a lot of money by not wanting to be fully invested at all times. And we don't think it's improper, actually, for people who are passive investors just to make a few simple investments and sit for their life. But we've made the decision to be in the business, so we think we can do a little better than that by behaving in a very irregular manner. But if you told me that I had to invest, let's say that we have a roughly $40 billion a year coming in, and we start with 335. If you told me I had to invest $50 billion every year till we got down to $50 billion, that would be the dumbest thing in the world to invest in that manner. Things get extraordinarily attractive very occasionally. The long-term trend is up. Nobody knows. And I certainly don't know. Greg doesn't know. Ajit doesn't. Nobody knows what the market is going to do tomorrow, next week, next month. And nobody knows what business is going to do tomorrow, next week, or next month. But they spend all their time talking about it because it's easy to talk about. Occasionally, very occasionally, but it'll happen again. I don't know when. It could be next week. It could be 5 years off, but it won't be 50 years off. We will be bombarded with offerings that we'll be glad we have the cash for. And it'd be a lot more fun if it would happen tomorrow, but it's very unlikely to happen tomorrow. Very, very unlikely to happen tomorrow. But it's not unlikely to happen in 5 years. And then the probabilities get higher as you go along. It's kind of like death. I mean, if you're 10 years old, the chances that you're going to die the next day are low. You get to be 115 or something like that. It's almost a cinch. Particularly if you're a male. I mean, all the records are held by females in terms of age. And I tried to get Charlie to have a sex change so he could test out whether... he did pretty well for being a male, I'll put it that way. Okay.
Well, that Charlie sex change joke was pretty funny. When I saw that earlier, I was like, oh, I have to put that in the video. But my main takeaway from that clip is that when you're playing at the level of Berkshire Hathaway, where they have hundreds of billions of dollars, and to really move the needle with an investment, it probably needs to be a business they wholly own for hundreds of billions of dollars. Opportunities like that really do not come along that often. And Berkshire Hathaway right now is set up to be one of the most financially stable companies in the entire world. So if at any time there's some kind of US financial crisis or global financial crisis, which it will likely be both, if that happens at any time, Berkshire Hathaway will be one of the top companies to be able to take advantage of that. And despite all of this volatility in April 2025, the market and really just the economy in general, we're still doing very good in the grand scheme of things. I mean, if we take a look at Berkshire Hathaway stock, they're trading at basically all-time highs, a $1.16 trillion market cap. The company has great earnings. Their financial strength is fantastic. So personally, I would be a little surprised if Warren made a huge acquisition in this April period. It could have happened, but a lot of the best deals were in some of those big tech companies that I talk about a lot on the channel, like Alphabet. But those companies really don't fit the criteria of anything Warren Buffett is looking to invest in. He famously avoids tech, especially if it's subject to a lot of change, like AI. There's no way he's going anywhere near anything AI right now. He wants companies that are going to provide reliable cash flows for decades to come. And purely in terms of technology, there could be a lot of change in those categories. But with all the trade war news and global power struggles, Warren Buffett is still a very big believer in the United States over the long term. And he was asked a question during the annual meeting about whether he still believes in Buy America. Here's what he had to say about it.
You've long been a strong believer in the American tailwind and the resilience of the United States, and history has proven you correct. Today, the U.S. appears to be undergoing significant and potentially revolutionary changes. Some investors are now questioning the concept of American exceptionalism. In your view, are investors being overly pessimistic about the U.S. economy, or is the country indeed entering a period of fundamental change that requires a reassessment from a new perspective?
America's been in significant and revolutionary change, really ever since it was developed. I mentioned that, we started out as an agricultural society. We started out as a society with high promises, and we didn't deliver on it very well. We said all men were created equal, and then we didn't do something about it for a long time. So we're always in the process of change. We'll always find all kinds of things to criticize in the country, but the luckiest day in my life is the day I was born. Because I was born in the United States, and at the time, about 3% of all the births in the world were taking place in the United States. And I'd like to say that I had something to do, so sent messages out to my parents, for God's sakes, moved to the United States before I was born or anything. But I was just lucky. And I was lucky to be born male. I was lucky to be born white. I was like all kinds of things. But if you don't think the United States has changed since I was born in 1930, we've gone through all kinds of things. And we've gone through great recessions. We've gone through world wars. We've gone through the development of an atomic bomb that we never dreamt of, at the time I was born. So I would not get discouraged about the fact that it doesn't look like it. We've solved every problem that's come along. And if I were being born today, I would just keep negotiating in the womb until they said you can be in the United States. So we're all pretty lucky.
I couldn't agree more with anything he said. Fantastic long-term perspective. I live in the USA. Very thankful that I was born here. I'm fairly confident about the long-term prospects of the country. My entire stock portfolio is basically concentrated in the United States. I mean, many of them are global businesses and have global business interests, but they're U.S. companies. And frankly, most of the best businesses in the world are U.S. businesses. So when I think about investing and opportunity costs, I don't really see any better opportunities than investing in the United States and U.S. businesses. And speaking of that, you have a great example of one here, Berkshire Hathaway, Inc. This is Warren Buffett's company and is one of the best investments you could have made at any time. And in every single one of Warren Buffett's annual letters, he puts Berkshire Hathaway's performance versus the S&P 500. And of course, that's the S&P 500 with dividends reinvested. And if you scroll down, you can see since he took over control of Berkshire Hathaway in 1965, the company's stock has grown at a compound annual growth rate of 19.9% versus the S&P 500 at 10.4%. And that's a pretty big difference in annual gains. But when you play that out over decades, the difference in overall gain is absolutely insane. The overall gain for Berkshire Hathaway stock is 5.5 million% versus the S&P 500 at 39,000%. So this is really just an example of long-term compounding at work. And when we look at the business of Berkshire Hathaway, it's really set up to just be a compounding machine. They own all of these private businesses and public stocks, and the companies pay their profits back to Berkshire Hathaway, the holding company. And the stocks they own pay dividends to them at the holding company. And then they reinvest that capital to buy more businesses, which in turn pay them more money in the future. And it's a snowball effect of compounding. And they own incredibly reliable, high cash flow businesses that slowly grow over time. And people are often worried about, oh, when Warren Buffett dies, what's going to happen to Berkshire Hathaway? But the reality is that the company has evolved far past just Warren Buffett. And at this point, it's a large conglomerate of many of the best businesses in the world. And all of those businesses are independently run and operated outside of the holding company. So all of their assets will remain and continue to be incredibly valuable in the future. And then Warren Buffett's chosen successor, Greg Abels, has a big background in the Berkshire Hathaway energy business. And right now, and probably until Warren Buffett passes, he will likely be kind of cooperating it with Warren. So if I had to take a bet on any company in the S&P 500, so one of the largest businesses in the US, of which one will be around 100 years from now, my answer now and probably for the rest of my life is probably going to be Berkshire Hathaway. And really, it's one of the most impressive businesses ever. So with that said, I'll wrap up this video. Thank you for watching. And if you enjoyed, leave a like, subscribe to the channel, and I'll see you in the next one.